Let's see, is gold ready to recover? And is this going to be the end of boring times in gold? Or do we still have more of a sideways move? Welcome to My Finance Teacher. Let's talk about gold. But first, as usual, let's have a look at the US dollar. The black zigzag over here was our expectation for the daily cycles in the US dollar as of a few weeks ago. And until recently, the dollar behaved pretty well according to our expectations, but over the last couple of weeks, dollar is performing better than I actually expected. The ongoing short-term daily cycle is 53 days long. I don't think the short-term daily cycle in dollar finished over here on the 16th of December, as the average duration of these cycles between late 2018 and mid-2021 is around 61 days. So 49 days, yes, it is quite possible. We've seen a very short daily cycle over here in August lasting for only 35 days. So 49 days is quite possible. I would give this scenario perhaps a 30% chance, with a 70% chance of further declines in the US dollar, perhaps at least to come back down to this 50-day moving average. After all, at the recent top in the end of November, the dollar was 2.8% above the 50-day moving average and around 4.9% above the 200-day moving average. During the previous intermediate cycle top at the very end of March this year, dollar was only 2.4% above its 50-day moving average and a smidge higher above the 200-day moving average. And even during this strong intermediate cycle top around the pandemic spike, dollar was only 4.8% above the 50-day moving average and around 5.2% above the 200-day moving average. So I think dollar is still a little bit extended to the upside, and perhaps just a few more days of downward momentum is more likely than further strength in the US dollar. Looking at the RSI, each of these previous short-term daily cycle lows came with RSI levels at 43 or below, and the intermediate cycle low over here in May came with the RSI closer to 33 rather than 43. Whereas the most recent weakness on the US dollar on the 16th of December brought RSI only all the way down to 53 rather than 43, which was the norm for the short-term daily cycle lows. So I do expect a bit more weakness in the US dollar, but of course nobody knows the future and I can be easily mistaken. So with this expectation for the US dollar in mind, let's move on to gold, where this black zigzag, our expectations for the gold moves have been pretty predictive. We were expecting a daily cycle low over here sometime at the end of November. Over here on the 2nd of December, we had a bit of a spike lower on gold, but looks like the actual short-term daily cycle low came a little bit later on the 15th of December. So let's adjust our zigzags a little bit. And the daily cycle low on the 15th of December is relatively good news, meaning that the ongoing short-term daily cycle is only 3 days long, and perhaps a further push higher is quite likely. Although looking at the intermediate cycle, it's going on all the way since early August, and it's around 4.5 months old right now. Usually these cycles last for around half a year, so this intermediate cycle is coming close to the timing of its intermediate cycle low. So perhaps the bounce into this new short-term daily cycle on gold is not very likely to create a higher high versus this November high before gold is likely to correct again, unfortunately, into the last intermediate cycle low. Is that going to be a significant correction? Perhaps, because zooming out, we will notice that at least so far, even though the decline in gold that we experienced between August 2020 and March this year has transformed into more of a sideways move, so far the intermediate cycle tops, as you see, have consistently been giving us lower tops. Lower highs combined with more or less lower lows, with the exception of the most recent low being kind of on par with the previous low. So far we don't see a convincing reversal in the ongoing trend. Hence, with the trend being your friend until it isn't, I would expect another significant correction into the intermediate cycle low. Whether that is going to bring us a lower low or not compared to the low in August, that still remains to be seen. But in either case, what it tells us is that there is perhaps good news over the short term, over the next 1 or 2 weeks, but still in the intermediate term, over the next several weeks, some caution is still advised. Next, before looking at gold seasonality and, more importantly, the optimism levels on the market, allow me a quick plug-in. Let me first welcome you at myfinancesteacher.org, which is a community of like-minded investors where I make regular updates on a range of markets, including precious metals, cryptocurrencies, stock market indices, energy, including uranium and fossil energy, as well as commodities such as copper, grains, and others. One of the interesting products in the community is the model portfolio, which is transparent, showing all of the history of my trades with the total gains without any leverage. So that's without taking too much risk, is around 55% between July 2020 and October 2021. With a 2x leverage, one perhaps could double the portfolio size in the same period. So if you want to see what's going on in the investment community, you are more than welcome to register. Welcome back to gold seasonality. I don't usually pay too much attention to seasonality, but in either case, what it tells us is that January is usually the strongest month for gold price. Of course, with the Chinese New Year upcoming, I think that could be one of the drivers for strong January. So perhaps in the short term for the daily cycle, there is still a bit of a momentum upwards, but in the intermediate cycle, with February being relatively weaker and with March usually negative, perhaps again the intermediate cycle low is still ahead of us over the next several weeks. Lastly, let's have a look at the gold optimism index, which is right now at 53, and it so far bottomed a couple of days ago at around 51. The vertical red lines over here indicate intermediate cycle lows in gold. And as you see, usually these intermediate cycles in gold last for around half a year. Often these cycles bottom with the optimism index somewhere around this green line, somewhere around the level of 30 or so. Although, since the pandemic low, the intermediate cycles in gold came with the optimism somewhere around 50 rather than somewhere around 30. That was perhaps with all of the trillions of dollars being printed. So whether the next intermediate cycle low is actually going to bring optimism index all the way down to 30 is questionable, but as I mentioned, after a bit of a relief rally over the next couple of weeks, I would still expect a noticeable correction down into this last intermediate cycle low before a stronger rally into a new intermediate cycle can be expected. Now lastly, let me leave you with this question. If we do see a bit of a correction over the next few weeks, do you expect gold to hold above this kind of a significant level around 1760 that has been hit several times with the lows as well as with cycle highs all through 2021? Let me know in the comments below, and for now, bye bye.